Hey, Sam here. I'm an ex-engineer, and every weekend I reset my charts, get ready for the week, and then by the time Wednesday rolls around, there's setups that look extremely interesting based on news, based on how they look, if they look clean, things that actually make sense, not meme stocks, not moonshots, just real setups with actual catalysts and defined risk. And this week I've got three that caught my eye: SMCI, CLF, and AEHR. And let's start with SMCI. You probably heard of Super Microcomputer. It's the NVIDIA that hasn't taken off yet. And you can see it right here. It's sitting right tight on the 20-day simple moving average. And to me, that's low risk territory. You're not chasing it. You're not getting it while it's consolidating. It's not AI companies. It's powering the servers that run AI infrastructure. And they're guiding nearly 50% revenue growth. So it's a big deal. Expectations are for an even higher jump next year. They've got 3 manufacturing campuses in California, and they just announced a massive data center deal with Saudi Arabia. It's worth about $20 billion. So they've got $1 billion in cash. Yes, the stock's down about 38% from its highs. And that's actually a good thing. That's why I'm watching it, because you don't want to get a stock when it's at all-time highs unless it's NVIDIA. So the chart's tightening up. Institutions haven't left. And if we get a clean move higher with volume, my position, which I just got in, you can see here, is going to look really good. Now, it's not just SMCI I'm looking at. There's 2 more stocks that I bought today. One of them is CLF, Cleveland Cliffs. And I don't usually go for heavy industrial stocks, but this one's shaping up technically as well as fundamentally. So they just posted a strong Q2, 4 million tons of steel they shipped with solid EBITDA. And more importantly, they've cut costs. They've got tariff tailwinds, and they're talking about divesting non-core assets. So the stock jumped over 10% on the back of these headlines here. Analysts are starting to pay attention as well. KeyBank upgraded the stock and slapped a price target on it. It's meaningfully higher than where it trades now. I don't love analyst price targets. No one does except for analysts. But the chart has been basing for a while, and it is curling up with volume. It's a kind of risk reward that's really superior here, risking off of this high volume close on the 21st of July. So I'm not in love with commodities, but if it does break out, I'm positioned well and I couldn't ignore it. So last one is AEHR, AEHR Test Systems. This is probably the quietest of the 3, but maybe the most explosive if it does continue higher from here. There's a ton of upside. I just got in today here. So what they do is they make test systems for semiconductors, and they're now shifting hard into AI. And a lot of companies are doing that, but at least they're not getting into like a Doge treasury or the 17th Bitcoin treasury. AI is the largest space, and they're smart to jump in. No-name company. The chart's textbook. I mean, it doesn't get better than a big close like this from serious pre-market volume. It's an easy risk level. Big earnings gap just a few weeks ago here over this $16 level. And once it reclaimed, it has been showing relative strength to the market. You've got this clear base that it came out of. And like I said, the volume just shows that funds are interested in this company. No debt, insiders are holding. And if it clears these highs and stays above them with volume, this is a very pretty chart. So I wanted to be positioned. I am positioned. And I think I'm not saying that it's the best stock to buy in the market, but it's the quietest stock. And I just took a position. So those are the three I bought this week. SMCI, surfing the 20-day, monster AI tailwinds. And I did trim a little NVIDIA. NVIDIA went on that massive run and is finally cooling off. So SMCI is a way to stay exposed to semiconductors while also letting the leader just calm down for a bit. I know one of the market wizards, Chris Camillo, has been rolling options out in NVIDIA and recently closed his position. So I'm fine taking my money into a lesser known semiconductor play, SMCI, at this really favorable risk reward position. CLF coming off of earnings with this base breakout. It is a commodities name, but it offers a really low risk opportunity to jump in. And lastly, AEHR, test systems, tightening up from this earnings reaction here. They have real AI hardware orders. They are a smaller company, but when you get real orders, it starts to get pretty exciting from a fundamental perspective. And I'm not telling you to buy anything. This isn't financial advice, but I am saying these setups are clean. The catalysts are real. I like the reward to risk, and I bought them today. So that's it for me. If you got anything out of this, let me know. And I will see you next time.